Welcome to Richie Shot.
We're kicking off the week with Alphabet hitting a $3 trillion market cap, followed by Trump's proposal on financials. And it's a Fed week. Let's see what unfolds. If you're ready, let's dive in. Wall Street starts the week with a bang. Markets kicked off Monday in full celebration mode, with both the S&P 500 and the Nasdaq hitting fresh intraday record highs. The spotlight wasn't just on the Federal Reserve's upcoming policy meeting, but also on one man, Elon Musk. Tesla shares soared nearly 6%, reaching their highest level since January, after filings revealed Musk himself had scooped up almost $1 billion worth of Tesla stock on Friday. That's the kind of personal vote of confidence that can light up a trading screen, and it did. The EV makers' rally lifted the S&P 500 consumer discretionary sector to a 9-month peak. But the Musk show wasn't the only headline. Alphabet, Google's parent, finally broke into the exclusive $3 trillion club, sending the communication services sector up nearly 2%. Think of it as big tech flexing, just in time for the Fed's big week. Speaking of the Fed, investors are bracing for a 25 basis point cut when Jerome Powell and company deliver their decision Wednesday. With job market signals flashing weakness, traders now expect nearly 69 basis points of easing by the end of 2025. In short, Musk is buying, Alphabet is soaring, and Wall Street is partying ahead of Powell. Not a dull Monday, right? Trump wants to turn earnings season into earnings semester. Wall Street's favorite quarterly tradition, earnings season, might one day become a twice-a-year event if Donald Trump gets his way. On Monday, the former president took to Truth Social to say U.S. companies should only report earnings every 6 months, not every 90 days. His pitch? Less paperwork, less cost, and more time for CEOs to actually run their companies, instead of playing the beat-the-quarter game. It's not the first time Trump has floated the idea. Back in 2018, corporate titans Jamie Dimon and Warren Buffett penned an op-ed warning that quarterly reporting fuels short-termism, that obsession with instant results that leaves little room for long-term strategy. Trump is now dusting off that old argument and putting it back on the table. Of course, the final call isn't his. The Securities and Exchange Commission, SEC, would need to approve such a major shift. If it ever did, the U.S. would join the UK and much of Europe, where semi-annual reporting is already standard practice. Still, not everyone's convinced. Some investors say fewer updates mean less transparency and more uncertainty, which could actually make stocks riskier. Others cheer the idea, arguing that trimming the reporting treadmill might calm markets and encourage bigger, bolder bets. So, could earnings season become earnings semester? For now, it's just talk, but it's enough to get both CEOs and traders buzzing. Google hits the $3 trillion jackpot. Make room, big tech. Alphabet just joined the super exclusive $3 trillion club, a neighborhood so posh it only has 3 other residents: Apple, Microsoft, and NVIDIA. On Monday, Alphabet stock soared more than 4%, catapulting the Google parent into record-breaking territory. So what gave the rocket fuel? An antitrust case that could have been disastrous, but wasn't. The U.S. Department of Justice had been gunning for Google, even suggesting it should be forced to spin off Chrome. Last year, a district court ruled Google was guilty of monopolistic practices in search and ads, sending shivers down Wall Street. But when Judge Amit Mehta delivered his verdict in September, he skipped the nuclear option. No Chrome breakup, no doomsday penalties, just a lighter slap on the wrist. Investors sighed with relief, then hit the buy button. The rally was so strong, it even caught President Donald Trump's attention, who congratulated the company and called it a very good day. Understatement of the year. Alphabet shares are now up more than 30% in 2025, double the Nasdaq's gain, and the $3 trillion crown lands roughly 20 years after Google's IPO. From garage startup to global titan, it's been one heck of a search journey, and the company just hit enter on history.
ECB voices split on inflation risks. Europe's inflation debate just got a little more colorful. At a Bloomberg event in Vienna, Martin Kocher, freshly appointed as Austria's central bank chief and a member of the European Central Bank's Governing Council, struck a calm, almost zen-like tone. He said inflation risks in the euro area look thoughtful, quite balanced, both to the upside and downside, and emphasized that the ECB remains ready to respond if data takes a sharp turn. His comments come as inflation drifts closer to the ECB's magic 2% target. Just last week, policymakers decided to leave deposit rates unchanged for the second month in a row, signaling a cautious, whispering, wait-and-see stance after a long battle with soaring prices. But not everyone at the ECB is reading the tea leaves the same way. Isabel Schnabel, another influential governing council voice, warned today that upward risks still dominate and insisted current rates are emphatic appropriate to keep inflation in check. So, the mood inside the ECB is a mix of Kocher's balanced optimism and Schnabel's cautious vigilance. For markets, it means the central bank isn't rushing to cut, but it's also not panicking about a sudden inflation flare-up. In Eurozone policy terms, that's as close to relaxed, steady as she goes as it gets.
TikTok deal gets a breakthrough. The long-running TikTok drama finally has a plot twist. On Monday, U.S. Trade Representative Jamieson Greer said Washington and Beijing have agreed on a framework deal to shift the app into American-controlled ownership. Treasury Secretary Scott Bessent, fresh from high-level talks in Madrid, confirmed the breakthrough but kept the details under wraps. The commercial terms are between two private parties. The fight over TikTok's future has been simmering for years. In April 2024, President Joe Biden signed a law forcing ByteDance, TikTok's Chinese parent, to sell or face a U.S. ban. That 9-month deadline kept getting extended by Donald Trump, turning the saga into a geopolitical cliffhanger. National security concerns remain the heart of the issue, with Washington wary of how user data and content control could be leveraged by Beijing. The new framework doesn't seal the deal, but it's the clearest sign yet that TikTok's ownership story is heading for a major remix.